Good day. I'm here to talk about the Rebel Ridge project, which is in Rokmaster Resources Corporation, Vancouver-based junior company of which I'm the president and CEO of. And we picked up this project in 2019 when we were thinking we should focus more on gold. We had a massive zinc project, which we still have. And it's a great project, but it wasn't getting the level of attention that we thought was necessary. And we felt gold was going to make a big move, which it has been doing over the last few years.
Brilliant. Good to meet you, John. And thanks very much for coming on the show and telling us your story. We've not met or spoken before, so we're just going to sit back and let this story wash over us. I might ask a few questions along the way too. So why don't you kick off and tell us a little bit about your background?
Well, I've been in the prospecting and exploration and mining development business since I was a youngster. I did my first jobs for major mining companies during the summer in high school. And then I got excited about a property that had been pitched to me by another older prospector, gave him my last $900 and never saw him again. So I chased that down and helped him give it a paint job and sell it. And the next thing you know, I'm in the business. So that's what I did. My first interesting summer was with Mark Rebliati, who went on to become a very famous, world famous geologist. And we still work together on a number of fronts. And so I'm not a schooled geologist, but I'm a member of the Economic Society of Geologists and a few other things like that, and follow that path. I'm looking for good rocks, and that's what I do. And currently, of course, you end up running these public mining companies by default. Is generally what happened here in the case of Rokmaster.
So what else have you been a board director of in terms of public companies?
Well, public companies going back a ways. Had a small mine, started with a company called Skylark Resources. Had a few other small projects with smaller companies. Was involved in staking claims in Hemlo in Ontario and making some dollars, which helped pay for a wedding. And then moved on from there to what did we do? Frontier Pacific Mining Corporation that got sold to. We ended up with a couple of properties in Europe, and that got sold. Frontier Pacific was that one, and then Pacific Rim Mining Corporation that ended up being taken over by Catherine McLeod and that group in the 80s. Moving on, Roca Mines Limited was a property which I'd been involved in since the 70s, molybdenite property. Ended up picking that up again and putting that into production with a public company and with a couple of great partners. In the early 2002, I guess we started that company on a property up in northern BC. We had another one called Stikine Gold, not Stikine Silver, the original one that was SK, but Stikine Gold. And picked up a Cameco property and drilled that. Didn't get too far with that. Then we picked up the extension and all the ground to the north of the Sullivan mine, the big Sullivan mine in British Columbia, from Teck, and drilled 3 9,500-foot holes there looking for the extension of the Sullivan mine. Success, but a thin intersection. So we dropped that. And then here I am with Rokmaster. We started off with a Peruvian porphyry copper gold property in Rokmaster. Gold fell out of bed about a year after we did that. 2013, went on to do a zinc deal amongst some other smaller ones in British Columbia. Went on to do a zinc deal, which is, we still have that in the company. That's going to be spun out with a copper deal that we have in Rokmaster into a new company called Four Metals Limited, with the shares in that new company going to the shareholders of Rokmaster, and that's in process right now. That it's a great zinc property, but we never did drill it. We have permits for all of those to drill, and we'll move those forward. Rebel Ridge. So 2019, talked to a huge Chinese company who had been investing in British Columbia in this project back in as far back as 2011, 10 and 11. And they did a lot of work to develop and double the size of the resource on the property before they lost interest, mostly due to low gold prices. And I'm going to suggest some political scene there, and they stopped investing in the project. we went to them because I'd known about the project in the past. I'd actually looked at it in 1976 with Mark Rebliati when we worked for South African Goldfields. So we were aware of it. Got an option on that quite cheaply. Second payment was $200,000, and next payment $1 million, and then this last payment we just made was $4 million. So we're moving down an option path, 5-year option, cash, no back-end clauses at all with the Chinese group, no royalties, no net smelter return royalties, no equity coming out for them, just simply, and no work commitments. So simply a cash option. They want to get their money back, and they're not coming back to Canada or South America at this point.
Okay, so, interesting. Just I wanted to understand before we get into the project proper. It was like, so Mark Rebliati. Okay, he is an active geologist on this, or is he on multiple projects, working elsewhere as well? Yes,
he was our professional engineer until this year when he's retired.
Okay.
So he's retired as a PNG, but he's still a consultant of ours.
Right. So who are the people active, like literally?
Mark is active. And Jim Oliver, him and Jim had worked in Hunter Dickinson for over a decade, made a lot of discoveries there.
I saw Craig Parry's name as well.
Yeah. So Jim Oliver is our project management geologist on site.
Because he's the active guy. And also saw Craig Parry's name associated with it. What's his
Craig is an advisor.
Right.
Role. He's been to site 3 times and provides lots of input and connections and capital markets.
Right. And you've worked with him on, well, you sold him. Vizsla, right?
Yeah.
Okay.
Vizsla, yeah.
Got it. Okay. Right. Can we just talk about the sort of capital structure here? Because it kind of looks, if I look at your share price from 2023 to today, I mean, it kind of shot out of the gate almost through 2020. Like I guess a lot of precious metal companies did, but it's come off and continues to come off at the moment.
Yeah, it's come off.
So what's happening there?
Well, it's come off from the 50-cent level down to the 25-cent level. And, I would suggest in this market we've had since Christmas, it's been a tough market. It's been a complicated market. It's a little bit of a tippy canoe. A lot of people aren't sure which way to go and what to do. I think we've held out fairly well compared to some of my friends who have suffered worse than we have. We have a couple of warts on this deal. We have a metallurgical story that goes back as far as British Petroleum when they had it for many years. Ross Beatty had it for 10 years. And the reason it's not a mine was it's the metallurgical issues that the property has enjoyed since the 1930s or 20s.
Right. And what was the other one? You said there were a couple.
And the other one is just it's a tight site. This is a typical British Columbia property. It's not out in the Nevada desert on the flatlands. So it's a.
What's a tight site mean? Sorry, to understand.
Tight site, like in the mountains.
Okay, gotcha. Okay.
But, we have great road access. We operate 24/7, even in the winter. So currently in the winter, what we do is we drill underground through some workings which we have access to. And we've renovated all of that for underground diamond drilling. And in the summer, we just do helicopter access for drilling and road access for drilling. And we have a large square kilometer land package in the area that we continue to prospect in the summer.
Okay. And we'll get on to the new PEA that you want to do, but so just on the metallurgical stuff. Obviously, you're doing a little bit of work on that yourselves at the moment. What's the historic issue been with that?
Well, it's mostly the gold is encapsulated inside another mineral called arsenopyrite, and we're not interested in using anything deleterious or environmentally harmful. So we're looking at pressure oxidization, leaching, pre-treatment of a concentrate product of that material. Just as simple as we can get with the technology that's off the shelf. This is not something new, but of course in the last 10 years there's been a lot of improvements in grinding, gravity. We can make a great higher grade concentrate, end up with a smaller plant, get good recoveries, and it's like I said, it all fits on this site. There's there's no issues in that regard. We have cheaper power, and we're close to a major industrial city, which it's not a big city, but it has a lot of people there that are helping us with everything from mechanically to construction to electrical and drilling, and whatever we need is pretty handy.
Okay.
And like I said, we're operating year round, even in this terrain. It's beautiful compared to working up north.
Right. So tell me, you I think you sort of describe yourself as a prospector, but with this project that you picked up, it's obviously had a few historic issues. You feel that you can work around those. Can you just tell us a little bit more about what you have actually acquired? What you talk about the infrastructure there, etc. But what
so
else
we
did you get?
acquired it because the blue sky. It already had approximately 1.5 million ounces of gold equivalent on it, and the Chinese had increased that to 2 million when we got an option on it for a very, got our foot on that deal very reasonably. And as gold is going up in value, our payments are not changing. There's no, there's no equity we've given them. There's no backing clauses. There's no anything. So we're happy about that. Metallurgy, we just have a super good team working on that, including management by Autotech Metso, who are premier people in this world for building plants, if you want, or and engineering that kind of a process, which we consider using on this site. If we want to make zinc concentrates with high silver in an area which we have clean mineralogy, then we can do that and sell that to the Teck Smelter and Trail, which is a few hundred kilometers to the south. Process the more complicated metallurgical gold concentrates on site and pour doré bars on site. And that was explained in our PEA, which we will update this year. So the 25 cents, well, it's a combination of things, including metallurgy and including a slow market. People did think we were going to instantaneously quadruple the size of this deposit with the drilling we were doing, and then I think they got their aspirations a little inflated there. We added somewhere close to 400,000 ounces in the round of drilling that we did over the year, and we'll continue to expand it in 22. But a lot of it was deeper drilling, so you don't get as many ounces for the footage you put into the ground. We are exploring. We're not filling in. There's no infill drilling happening on this property on my watch. We're making things larger, and we're looking for new zones. And that's what we'll continue doing this year. Metallurgically wise, we've done some drilling further away from the original metallurgical sampling that was done, so that we can address any variability issues in the mineralized zone that take place in various spots. And that data can be used for more feasibility studies if you want to get up into that level. And that's what's happening right now.
Okay, so this just to remind people, because this is a relatively high grade body you've got here. Okay, we're talking sort of six and a half grams per ton sort of level, but it is, as I say, deep. So let's break up the resource as it's indicated. So the M&I bit is 1.36 million ounces, and the inferred is about 1.2, just over 1.2 from memory. Yeah. You're not interested in doing any infill drilling or advancing that. You want exploration. You want to see where, what are you trying to work out with the exploration, actually, with the exploration?
That's right. So our drilling around those resources will be to expand the resource on the inferred category. And then we're stepping out for many kilometers on strike and parallel and up over the next mountain and down the other hill. So we're doing that kind of work as fast as we can. But with COVID, we were sort of sticking with only one drill. I didn't want to populate our work. We have a nice camp there we can utilize, but I didn't want to go through that process. So we've been running one drill for a little over a year and pounded out lots of meterage with that. We have a great crew. As like I said, we're close to town. We can stay in town, come out to the site, do whatever we want. Pretty handy. So expansion of the resources, updating the PEA, that's going to happen. Metallurgy, we've come up with some great results so far, and you're about to see some more. Just drop dead stuff. So it's going to become that resource, which it didn't matter if it was Pan American or British Petroleum or Rokmaster. That 2.5 million ounces is just going to go from the difficult side to it's an old story. The metallurgy's resolved.
Right. Okay.
So that's a value add that's incredible.
Right. Okay. And this is
on the resource.
Some of these historic stories is they do tend to stick in people's minds, and they don't tend to bother to update themselves. So you got to shout that from the rooftops, don't you? So can you just kind of split up the drilling budget for me then? So with regards to getting an updated PEA, how much money and what's the timing on that?
Yeah. So right now we have about $3.5 million in the bank for drilling.
Okay.
And we'll probably get into June, and then we'll do another financing. We'll do a flow-through shared tax financing to continue drilling. We have enough hard dollars in the bank to do any of that work that we need to do for metallurgy or anything that doesn't qualify for.
Do you think that's sort of making, given the depths of some of the drilling today, do you think that the financial constraints there make people nervous, or do you feel that you would argue that you were doing this sensibly, not diluting shareholders? Do you know what I mean? There's those two camps. So get all the money you can while you can, and others are be slightly more conscious of dilution. So
yeah, we are always aware of the dilution and issues, and of course at 25 cents a share, it's an issue. So we're not putting any more money in the bank than we need at this point. Right. We have lost to continue a good round of drilling. And of course, results don't come in super fast. So
are they? Oh, that's interesting.
Yeah, the results are extremely slow the last 2 years.
Right. Okay. And so that's the kind of PEA component. And then with regards to the going up the hill and down the other side bit, where you actually want to sort of get the real blue sky component. I mean, what are you allocating for? How much of the 3 and a bit are you allocating for that? Well,
but again, that's another issue where you whenever you find something on surface and you send it in for assay, even if it's visually exciting, you're going to wait to put all that data together before you fly a drill over there. So it's a little bit tricky. We have a lot of nice targets now that we could drill. So probably half our budget is for pretty expansion type hunting for new showings with the drill, prospecting with the drill.
Okay.
And we've got some great showings for that. We've also got back a bunch of results we're just compiling now from soil sediment samples that we've done last fall.
Okay. So where do you sit in terms of the argument of, these days, what sort of number do you think you need to put out with a PEA to kind of get noticed, get the credit for it? Because it kind of used to be, hey, put out million ounces and people pay attention. Now it seems to be like 2 million ounces. So.
Yeah, that's old news.
Yeah.
Sure. I don't know. Like we're going for 3 million ounces.
Okay.
This year, that's the target. 3 million ounces, and then of course on top of that have a nice batch of targets to follow up on.
Okay.
And resolve any metallurgical, any metallurgical issues that we had last year are virtually gone, and we'll resolve a lot of that, fine tune it this year, put all that in an updated PEA with a new resource. So.
Okay. And do you think that with regards, if you can hit that 3 million ounce thing, hopefully it has an impact in terms of the volume of trading and the liquidity, etc. But in terms of the share register at the moment, there's a lot of insiders on this thing at the moment. And I know you've got Crux in there, but Crux are in a lot of these small plays at the moment, hedging their bets, I suppose. But what's the kind of profile of investor that you're looking for, or that you want to be talking to?
Well, we currently do have very serious people who are investors in it, and they're still in it, and they're in it because of that blue sky. They're in it because they can see that we're going to take what wasn't an economic deposit, because the metallurgy has become an economic deposit, or at least be framed that way.
Right.
Of course, it doesn't happen till you mine it. But
so let me be clear about what the blue sky component is. Are you saying the blue sky is the fact that you've sorted out the metallurgy and you're going to deliver a 3 million ounce, all categories resource, or is it the drilling that you want to be doing? It's
future drilling.
Right.
This is a beautiful orogenic deposit, which is even in the main zone itself, without expanding that north or south, it's going to go down deep, kilometers deep. And big changes are happening down there too. We've started to get a zone parallel to the main zone sulfide zone, which is all free gold, which is a beautiful surprise to have.
It is.
No metallurgical challenges whatsoever, and we're working on that.
Okay.
Expanding the free gold potential.
And also just trying to understand the economics or confirm the economics. It's an ever-changing environment with regards to costs out there. I was just looking at the PEA highlights in 2021. I mean,
right.
NPV 5, 425 million or so, 30% IRR, and a reasonably low AISC in there. I mean, and also, you're talking about the analyzed production of like 125,000 ounces a year. I mean, it does paint a picture of something, quite attractive, but people aren't getting that.
That's right. So it's very undervalued.
Okay. Do you want to talk about 2022? What are you going to do?
And we're in this area is, if you're going to develop a project, or at least I can hand it off to somebody who's going to develop it, it's going to be a nice package in a nice area. Tier 1 jurisdiction, lots of backup. We've built, my team's built mines in this valley in the past, whether it's making deals with the local communities or the First Nations, or just construction and making sure it gets done. We've got the ability to do that ourselves, or at least package it so that it's fairly friendly looking in the hands of somebody who might want to get involved, or take it off our hands.
Right.
But I think 3 million, getting back to your asking there, I think 3 million ounces is a better number to be talking about.
Okay, and then when I look at the PowerPoint with regards to 2022 objections, it kind of comes up with a Canadian dollar number of 13.5 million. Is that cumulative over the last 2 years, or is that because those numbers aren't the same as you described to me earlier in terms of the drilling budget?
Yeah, our payment dates are the end of February, beginning of March.
So explain that.
Yeah, it's not a cheap option.
Yeah,
but you've got billions of dollars worth of gold there already. The value of the Canadian dollar is not going up; it's going down. The more we find on this project, and the more we de-risk it, especially on metallurgy side. I do get the odd query from the vendor on the property about how they might, going forward, make some more money in the future if we put this into production. And I haven't gone down that path quite yet in that discussion. But I have. They do know, and they have been asked to think about taking all those payments off the shelf and letting us use that money to go drilling, and maybe make a little more money down the road from production. And so. That's a topic which we revisit regularly with them. But right now, I cannot even get on a plane and go to Beijing to have a meeting without getting off and entering a 3-week quarantine. So I'm just not interested in that.
No.
And politically, they don't have much, they're not coming over here for holidays like they used to.
Well, okay. But that sounds like an interesting conversation to be had, because it would make sense. Well, definitely for you, and possibly for them if you get it right, to be able to allocate that capital on the project.
Wonderful.
Okay, well, I guess that's something to stay up to date with you.
Let's get the share price up this spring and get drilling, and show some good fine tune some different metallurgical results there, and make sure that we've got all the bases covered.
Okay.
And it's a bit of an interesting, choppy market for junior miners right now. Gold, $1,900 or $2,000 an ounce. The way the market is reacting, it's $500 an ounce. So, how do you read that?
I stopped trying 6 months ago. I think most people are struggling with that one. But
we have $1.80 zinc, and it's not choppy. The zinc market's not choppy, and base metal markets are looking good. The spin out that we're doing is a lot of value add for the shareholders of Rokmaster. Rokmaster is not getting paid for that. It's the shareholders that will get the new shares in the new company.
Right. Just on, and who's going to manage that? Is it going to be the same management team, just a different entity?
Some of it will be, yeah.
Right.
And we'll have some different people in there who are specialized in that.
Right. Okay. And so you'll go and rate. What's the timing on that one? Sorry.
That's likely the entire process to the finish line is around 6 months.
Okay. 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 I guess you can't tell us much more than that at the moment.
For when it's trading,
Yeah, for sure. Okay. So you're okay. You're okay for cash for a while then, by the sounds of it. You're not burning through too much.
Yeah, we're getting pretty good mileage with the money. The most expensive part of our drilling campaign when we started was renovating the site and the underground workings. There's many kilometers of underground workings that needed to be electrified and ventilated and safety, and that's all done. So whenever we resume drilling on that site, we just walk in and flick the switch.
Okay, interesting. Okay, John, I appreciate the run through
Sure.
of the story. Not heard it before, so I was keen to try and understand what was sort of going on there, because like I say, it's on the surface of it seems quite attractive. So stay in touch. Let us know how you get on with the drilling. I'd be keen to sort of see what that looks like when you start getting these assays back in. Okay.
Yeah. No. Let's revisit later when we've got more drill results, and metallurgical results will always be coming in, because it's like I said, we need to test all the different spots in the ore zone because they're different, so they're variable. You can't just take samples like we did in the old days from one level underground and apply that to the whole ore zone. So we're covering all our bases with that. And but right now, just so you know, we have a flow sheet that works, and that's an amazing thing to say when this property's never had one in the past.
Okay, John. Well, stay in touch. We'll speak to you soon.
Okay.